Hello everyone, a very warm welcome to all of you. Today is Wednesday, 14th of December, and we are here for a daily market analysis. So, daily observations we are going to see for Nifty as well as Bank Nifty and the stock that we are going to discuss today. Now, as you can see, the analysis that we shared on Friday, the weekly market ke lagta hai is working very well. So far, the Friday lows are being held in both the indices, Nifty as well as Bank Nifty. Bank Nifty is an outperformer, but Nifty is also picking up the pace slowly, gradually. And yesterday it managed to close above 18,604 level. If you recollect, in yesterday's video, I had categorically suggested that the first target, the first bullish target of 18,569 should get completed, and from there the journey up till 18,604, this phase will be little trickier because 18,604 being a last year's all-time high, Nifty may not be able to cross this level any number of time. Whenever we visit this level, it is going to take a while for Nifty to cross this level, either on the upside or on the downside. So now once it has managed to close above this particular level, on a daily chart at least we can see the close at 18,608. So this is where it has closed. Now this 1 2 3 pattern is also working out as we expected. Now here one interesting thing which I want to share with, I'll just remove this old target. Cool. Yep. So now this current phase is a retracement to this bearish trend. So the current bearish trend, the current correction that we are seeing from the highs of 18,888 or 887, and from those levels we are seeing some bearish fall, and this is going to be a retracement of it, and these retracements typically goes in the form of a 1 2 3. Now what do I expect? I'm expecting this target of 18,629 to get completed. Open interest data suggests that the price might be headed towards 18,700, and in that case we will get all these three targets completed. So 18,651, 18,685, all these targets will get completed, but there is a but. So as I said, as I had mentioned categorically in yesterday's video, that this trend might last or might not last. So when you are trading, see, you have to understand each phase of the market differs from the earlier phase. So even though the prices or the cycle, the trends, they may appear that they are moving in a similar fashion, but yes, there is a different psychology behind it. In this particular trend, the big players want retail investors to buy and get stuck in this particular phase, because this is just the tip of the iceberg. We are going to get a little bigger fall than this in the coming days. So naturally, this rally is to attract unsuspecting retail buyers. Now, this can also be called as a suckers rally. So it may last, it may not last. So keep that in mind. So you have to maintain or manage your position sizing in accordance with that, and you have to keep that into your mind all the time while you are trading this particular trend. Most of the traders are not being able to understand this up move, and they were still expecting a bearish move in this particular phase. So that also we have to take into consideration. People are stuck at these levels and they are probably short, and the shorts are being squeezed. So today we can expect some gap up, but what happens after the gap up opening? Let's say first 15 minutes will be very important. If there's a profit booking, I would say aggressively trail your long positions if you are carrying any, and if we get a open above these levels, right, it may also possible that we might get a open of about, let's say, 100 point up or so. If we get that kind of open, be ready, be prepared to book or keep a trailing stop loss to at least some of your positions, okay, so that some profit can be locked. Whatever profit that you see on the table, you have to either lock it by trailing or you just have to book it. For Bank Nifty, the first target of 43,878 is completed. The 1 2 3 pattern is working here as well very well, and even here, while price tried to test this upper range of 44,000, it again gave up, show some retracement, some consolidation, again to move up. So the gap up will be very important today. If at all we get a gap up somewhere around 200 points or odd, it will be of a great help for the bullish positions, because in that case our second target of 44,017 will get completed. Guys, understand, at the level of 44,000 there will be too many confluences, psychological pressure. So testing an important level will bring some kind of a profit booking, and we have to check whether it is going to sustain at those levels or not, because 44,000 is one such level. So OI data is suggesting that the 44,000 level should be visited, number one. Number two, the OI data also suggests that there is a possibility that we might move 100-200 points ahead of 44,000, but then you have to be extremely cautious about this particular move and take all these things into consideration while you are entering the trade. Most likely the long positions that I am carrying today, I would love to cover them with a aggressive trailing stop loss. I'll trail it aggressively after opening, and if I get an opportunity, if the 15-minute candle is showing some kind of a profit booking or open and high same kind of a scenario, I will just book it out and move out of the trade, and they'll think after, let's say, 1 hour or so for the intraday trades. But the trades that I'm carrying right now, so I'm carrying certain overnight trades, and in these overnight trades I'm carrying few lots of Bank Nifty 43,500 call long, and also I'm carrying 18,500 call long. Okay, yesterday I booked my strangle, the January month strangle, for a basic reason, a very simple reason. I had made about 7.7% profit in that particular trade. I had been maintaining about this, that I want to book this strangle once it reaches to 7.5% profit. So this was the entry prices and the current prices, the exit prices I have mentioned here. I would have held on to this particular trade and it would have delivered the entire profit that was expected from this trade. But the idea is that to maintain the discipline part, I already have a February strangles in place. The only thing I could not cover yesterday, because it was a last minute, I decided I want to exit from these positions. I have not been able to cover these hedges for my January strangle. So that's why the MTM is looking little screwed up. But otherwise we are not doing very great. I mean, this is just a beginning of a strangle. So this even February strangle is at neck to neck level, you can say. Right. So these are the positions that I'm holding. Reliance December future, I'm long on this particular position. So what I'm expecting here is it looks like a higher low. So either it is a higher low or a retracement to this particular fall. So in that case, what happens is that from this level, nowadays trading view works very slow. Especially in the morning, I believe they must be running through some maintenance. Tomorrow I'll use TradingView app so that at least the working is smooth. Okay, so what I'm expecting here, in this particular trend, the important targets can be number one, 2650, or it can be 2670, right? So these targets are possible, and understand that this is not a secular bull run. Okay, so this is going to be a retracement to this fall. So a 50%, or even let's say, now this entire thing is dependent on Reliance. So Reliance, if it is bullish, then we might get a target of 2670, and also it will help. Why I'm saying that it is dependent on Reliance is because it will also help Nifty move to the greater target. So max I feel that 18,697, this is the level where I'm expecting Nifty to be by today, tomorrow, before the expiry, tomorrow's expiry, and then it will be anyone's game. So we'll analyze it in a fresher mind maybe tomorrow, because by then our weekly targets will also be completed. So let's take one day at a time. For now, it's look like a good up move in the opening, and then the day will begin as usual. So let's hope for the best. Thank you so much guys for watching this video. That's it from me. Bye bye. Have a good day.